Have $1,000 and looking to invest wisely? Welcome to Money Gainers Hub, the channel where smart money moves become simple. We break down personal finance wisdom, including earning, saving, wealth building, and investing into powerful and practical tips. So, you can make smarter money moves fast. Grab your notebook, get focused, and let's unlock your next financial breakthrough starting right now. In this video, I will guide you through creating your first ETF portfolio. It's designed for complete beginners, step by step. Why $1,000 is an ideal beginning? While $1,000 may not seem significant, but it serves as an excellent starting point for investing. This amount allows for purchasing a variety of ETFs, promoting diversification, and establishing solid financial habits. The sooner you begin, the more your investment can grow, thanks to the power of compound interest. Step number 1. Define your investment objectives. So prior to investing, reflect on these questions. Are you aiming for long-term growth? Are you saving towards retirement, a home, or financial independence? Your objectives will shape your risk tolerance. Consider this. If your investment horizon is over 10 years, you can take on more risk. If you require access to the funds within 2 to 3 years, opt for conservative ETFs. Step number 2. Select your brokerage account. To acquire ETFs, a brokerage account is necessary. So consider beginner-friendly platforms like Vanguard or Fidelity, suitable for long-term investors. CMC or Robinhood, user-friendly, ideal for novices. eToro or Stake for international users. Look for one with minimal or no fees, and that allows for fractional shares. Step number 3. Decide on your ETF strategy. You can approach your ETF portfolio in 2 straightforward ways. Strategy number 1. One fund portfolio. Invest the full $1,000 into a broad market ETF, such as VTI or VOO. This method is simple and effective. Strategy number 2. 3-fund portfolio for more diversity. Allocate 60% or $600 to an Australian or US total market ETF like VTI. Allocate 25% or $250 to an international ETF like VXUS. Allocate 15% or $150 to a bond ETF such as BND. So this strategy encompasses Australian or US stocks, global equities, and bonds for added stability. Step number 4. Purchase your ETFs. Once your account is established and funded, look for your ETF tickers and execute a buy order. If your broker provides fractional shares, purchasing partial amounts is possible. For instance, VTI could cost $250 per share, but you can buy $100 worth. Here is an example of an allocation for a $1,000 investment using the 3-fund strategy. $600 in VTI, $250 in VXUS, and $150 in BND. Simply click Buy, Confirm, and you become an investor. Step number 5. Initiate auto-investing. To continuously grow your portfolio, establish automatic contributions, even if it's $50 or $100 a month. This practice is known as dollar cost averaging. It smooths out the market's fluctuations by investing regularly over time. Most platforms allow you to automate both deposits and investments into your selected ETFs. Step number 6. Monitor progress, but avoid micromanaging. There's no need to check your portfolio daily, as constant monitoring can be detrimental. Examine it monthly or quarterly, so keep an eye on growth trends, any dividend payouts, rebalancing if one ETF significantly outgrows the others. Apps such as Personal Capital or Empower assist in tracking everything conveniently. Step number 7. Reinvest and amplify returns. Upon receiving dividends from your ETFs, reinvest them. Certain platforms offer this automatically through DRIP or Dividend Reinvestment Plan. Reinvesting enhances your compounding returns, potentially increasing your $1,000 significantly over time. So aim to add consistently, stay invested, and allow your portfolio to mature. You've now mastered the steps to create a $1,000 ETF portfolio. Hence, start your investment journey by defining clear goals, choosing a suitable broker, strategically selecting ETFs, and committing to consistent investments. A modest start can yield substantial outcomes if you remain disciplined. If this guide proved useful, please subscribe, like, share, and don't miss our next video about the top ETFs for long-term wealth accumulation.